You're listening to the Real Estate Runway podcast, powered by QUATTRO CAPITAL, where we are all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, the recovering engineer turned multifamily investor, Chad Sutton.
All right, folks, today we have a very interesting investor. In the tumultuous times that we're in today, we are really in a position where we need to be creative in the investment world. We need to be figuring out how to get deals done, not saying there's no deals out there, not saying that the environment we're in is not conducive to investing. It always is. There's no one better to tell us why and how than Mr. Asa Patterson. Here we go. All right, Real Estate Runway family, welcome to another episode of the Real Estate Runway podcast. I am joined today with a friend of mine, Asa Patterson. This gentleman is a managing partner of the Infinity Group, HP Funding, and private lending companies with ownership interest in commercial and residential properties across the country. He's a serial speaker, teacher, investor. The guy just has so much knowledge and he's so willing to give it. So I can't wait to introduce him to you. He also is a specialist in structuring private funding for real estate investment transaction using his Infinite Money Alliance program, which we'll talk a little bit about, as well as IRA investing and other types of creative ways to finance your deals under a company called Premier 72. He has a passion for training and educating the young generations and helping them create a brighter future through understanding financial principles. Asa, welcome to the show. How are you doing today?
I'm great, Chad. Thank you for having me. Looking forward to having the discussion with you.
Absolutely, my man. Absolutely. So, hey, I just rattled off a lot of stuff there, but man, tell me a little bit about who Asa is before we get into some of the meat of this episode, and kind of what curiosity got you to where you are today, man. You're clearly a curious guy with a dream.
So it started in the Marine Corps when my wife and I, really kind of thought what our future path was going to be, and we realized we wanted to retire wealthy and retire early. It seemed like a lot of people, when they talk about retirement, they're seniors, or I'm closer to a senior now, but they're just old and moving slow. And we wanted to retire when we're young and able to really enjoy money and time. And I went around and was asking advisors that I looked up in the yellow pages, because that's what we had at that time, and began interviewing them to ask questions about how to retire, where does the money go, all that stuff. And everyone that I questioned seemed to be annoyed with the questions and seemed to really not want to share the answer. I don't know what it was, Chad, but that's how we felt. And it led me to get my license in securities. I have had my Series 6 and 63, that's for mutual funds and variable products. And I was just blown away about what I was learning, and really, to me, how simple it was. And it just built from there to today. I just love teaching and helping people understand the value of money, and that it's so easy to acquire it if you have a plan and just really spend some time thinking about it.
It's kind of amazing, just what you said there. There's this, for some reason, there's this magical book of secrets that, certain bits of the population aren't taught. And when you ask about it, if you don't find the right person like an Asa or like myself, people just aren't willing to share. It's the most bizarre thing.
I agree. And I don't know where it comes from, if people just are afraid that, Chad, I can't tell you about what I'm doing because you may come over here in my room, in my backyard, and start taking it from me. And it doesn't work like that. The true wealthy know about collaboration. But then again, Chad, it goes back to what we're taught in school. Hey, you can't look on someone else's paper. You can't work together in groups. They make us rugged individualists, when really, to have success, you have to work together.
That's absolutely it. And, there's a little bit of scarcity mindset there, I think, because, there's a lot of people out there who think that, hey, if you learn this, you're going to take what's mine. And guys, what I know, and what I think all of you know over the last 2 years, is money is not finite. And if we need more, we just print more. So it's not like
that is
a little bit of a joke, joke. So fantastic. Well, tell me a little bit about the various ventures that you're in. I mean, you're a real estate investor. You've done some lending, maybe just kind of help me understand what all you're doing and that you've picked up over some of these yellow page phone calls over time.
Yes. Thank you, Chad. So what's interesting is that the path that most people go on when they become a real estate investor, First, they want to learn about wholesaling because typically they don't have the cash or credit. And then they say, okay, after I wholesale a couple of deals, I have money to rehab it so I can buy it, fix it, and resell it. And then after that, they may think about rentals. And I'm sure you've seen the same path that people go on, but there's so much more. When you understand the financing piece, when you understand that just how to structure a deal, there's a saying that the wealthy, once they're wealthy, they don't even spend the money that they have because they get comped in perks everywhere they go. And so I started that same path. And my specialty, I really love lease options or turning a pre-foreclosure into where I control it into a lease option to someone who, really desires to own a home, but just doesn't have all the things in place to qualify right today. So I enjoy that. And, I've always been a in the beginning, a broke real estate investor. So I had to come up with creative ways to put deals together. And I think for me, that was the best thing that could have happened because when the mortgage meltdown happened in 07, 08, 09 and on, I was really geared to take advantage of that because I didn't focus on good credit and good financing. And as you already know, Chad, what's going on in the market today with interest rates going up, 2 points, people are freaking out because they're looking at, I don't want to pay 7%. Well, during the Reagan era and Jimmy Carter era, there was double digits, 18% on your personal home. So I just think it's interesting the path that people go on and how we really don't think outside the box. There's such a vast area of making money in real estate that doesn't require you to swing a hammer. So I enjoy that. So when the market crashed, that's what happened. There was a need for lending because no one was lending during that time. And I found a niche where I was a super hard money lender, Chad, targeting 10 points.
Super hard money lender.
10 points and 15%.
Oh, wow.
That was it. But we were able to move money around because no one else was lending. And when you look at a deal, and I tell investors all the time, it doesn't matter how much the money costs, it's what are you going to walk away with and profit at the end of the day. So you can get money that's 25%, 50%, but if you're going to profit on the deal, does it really matter that money costs that much? And it's just a brain freeze to really begin the process of moving from the consumer mindset that is all around us to a business finance mindset.
That's absolutely it. And just making it, sorry, by the way, that sound was my roll back the tape. If y'all didn't figure that out,
That's good to go.
Anyway, but no, not only is it not matter what the debt costs, it's really the interest rate isn't the thing, or the question is how long do you hold and pay that interest rate? You might be 15% APR, but if you only hold it for a month,
right,
you didn't pay 15%.
And then when people are like, well, I got a 3% rate, but it compounds. If you looked at the total amount, how much that cost is. So again, people don't think all the way through. And, I'm not a genius or anything, but I just attempt to look at the same picture in a different way and think of how can the same thing be accomplished without going through what they're going through.
Yeah, no, that's incredible. I mean, I'd love to hear maybe a story or two of so, we may be going into a financial crisis. I don't know. I mean, I know there's a lot of liquidity out there. I know interest rates are going up. Everyone's talking about inflation. I don't know, man. We're not reading tea leaves here. The point is, who better to have on the show right now than someone who knows how to be a creative investor? And so I'd love to hear maybe a story or two about the, a war story, if you will, about the 08, 09, 2010 period. Maybe just give us a case study of like how you put one of those loans together. What was the buyer avatar? Was it just a home flipper? I mean, that's some creative stuff. Nobody else is lending. How do you get the nerve to lend?
Right. So, the same thing is going on now, Chad. Lenders won't lend under $100,000 or $150,000 because it takes the same amount of work, same amount of effort on a $200,000+ loan than on 100, and they just don't want to do it. So we're putting together a fund to do that as well in today's market. But when the mortgage meltdown happened and people's houses depreciated in value, well, let's say Tom, your neighbor, who doesn't have a desire or interest to sell his house is freaking out because he thought it was worth 500, now it's worth 250. And again, who cares, Tom? You're not moving, you're not refinancing, you only owe 100 on it, so it doesn't matter, right? So, but with the market today, as things change, sellers won't be able to sell. Here's the ideal situation where you have a seller who's already sold his house, moved into the new home. They were, they were doing the same thing at the same time, trying to find a new house and sell the old home at the same time. Well, typically, they either one or the two, it typically doesn't happen at the same time. So they have moved on and they're paying mortgage in their brand new home that they love and enjoy. And now they're still paying a second on the mortgage on the original home that they moved out of. They can only do that for so many months. And they really don't know what to do. They don't want to damage their credit. They don't want to go into foreclosure. So they're really doing things. So that's when I come along, and that's what's going to happen in this market too, Chad. It's just beautiful, where now they can't sell. So they become a don't want. Hello, Mr. Owner. My name is Asa Patterson. I specialize. I don't want to resell your house. I want to buy your house, but it has to be either all cash at a significant discount or terms through my lease option program. That's the script right there. Well, tell me more. You have that conversation and they deed me the property. Or we just do a land contract, depending on what state we're in. And we take over that asset. And now at the same time, I've already run marketing for your job is your credit, looking for a home, we can put you in a home. And I already have a list of potential buyers and how much of the non-refundable option consideration they're willing to put down. Now, you have to phrase it as that. I know you already know, Chad, right? Because if I say the down payment, that connotates ownership, and that is a different process to move them out of the property if you have to. But so now I already have a list of buyers who are happy to buy. They have the desire, they have the mentality, they have the income. They just don't have all of the underwriting criteria that the bank requires. So we move them into the house. Typically, the non-refundable payment that they give brings the payments current that the homeowner, well, and I just gave you a different scenario. In this scenario, they're current, right? But if they were behind, again, we use the money from the tenant buyer to bring it current. And that's really how you put those things together, because a market where the sellers still want to sell, but there aren't any buyers. And that's what's happening now. It's going to slow down the aggressive buying that has been going on for years because of the lower rate. So now it goes from not enough houses on the market to now it's going to be too many houses on the market. And that's really when you have the opportunity to help, because I win because I'm able to structure a deal, no money out of my pocket. The tenant buyer wins because now they can move into a home that they desire, and we're working on their credit and getting them in position to refinance into ownership. And the previous owner wins because now they don't have to make 2 mortgage payments. And depending on how we structure it, that original owner can still depreciate the property on their taxes. So it's just so many ways to win.
That's just, it's genius. I mean, it's fantastic. Everyone wins too. It's not like you're taking advantage of someone in a bad position. You're helping them out of a problem they're stuck in without you,
Right.
Fantastic. Right. Well, in the spirit of creative investing, I'd love to talk a little bit about, pivoting over to what you use insurance policies for, this Infinite Money Alliance program that we kind of briefly spoke on in our introduction call. Tell me about what that is and how it works. And it's not infinite banking. This is a different thing, right?
Right. It's not infinite banking. That. It's just as good as infinite banking, because I'm always looking for, like, I don't know if you remember the $6 Million Man. And I just lost the dang on wording there. But I'm always looking for a better way of doing what's already being done, and a better way of structuring a deal so that everyone wins. So with the lending program, there's a lot of people who are underinsured. I have my insurance license primarily because there's a need, and because insurance is a financial tool, Chad. I mean, is such a powerful tool that people don't know. They think of insurance as their car insurance, and I'm only going to have to pay my car insurance and I don't get anything back. New insurance has something called living benefits. They say over 60% of the of the population will have some kind of debilitating illness before they pass away. With living benefits and insurance, you're able to receive a percentage of your death benefit today. If you have a terminal, critical, chronic illness, you get that money today to get advanced medical treatment, to continue to pay the mortgage, continue to pay the tuition for the children. So it's just such a powerful tool. But when you're dealing with cash value policies, you're able to really use the money and create velocity. Here's an example. Let's say you have $50,000 in a checking account and you have $50,000 in your cash value life insurance policy. And Chad, you want to do a deal. So the deal requires $50,000. Let's say your purchase and repair total $50,000, but the purchase price is $30,000. Well, when you take the $30,000 from your checking or savings account and put it into your deal, that's great because now you can do a deal, but your account value has gone from the $50,000 to $20,000 because of course you used the $30,000. Well, with cash value life insurance policies, and I'm just doing my best to stay as high level as possible, Chad. If you have any questions about it, just jump on, or any questions you think your audience may have as I'm talking, please jump in. With cash value life insurance policy, the one that we structure, the $50,000 in your cash value remains there. The insurance company cannot lend out its cash reserves. They have to keep the reserves for any type of death claim that they have to pay out. So they can't invest it in the market, but they can lend the money out. And they lend it to their policyholders that have cash value policies. So when you borrow $30,000 from your cash value, that is $50,000, it comes from the insurance company's bucket, not your bucket, from the insurance company's bucket. So you borrow $30,000 from the insurance company, your bucket continues to have the uninterrupted compound interest growth. And it's just a wonderful thing. So understanding how to do that in conjunction to a real estate deal is just a win-win-win scenario, because so many people, let's say they're a crypto person, or they just understand stock markets. They create this money, but true wealth is created when you're able to take a bucket of money, put it somewhere, and then live off the interest, not the principal. So the reason why we created the entire program is so that I can show some clients, or even as I talk on podcasts and your show, we're able to show people that have cash value policies how to maximize them. Because it is a good thing to leave it as it is, but when you really accelerate it, it just goes to an infinite level of opportunities.
Yeah, that's fantastic. And so, I mean, give me some examples of what you're using this for. I mean, you mentioned, maybe just for a chunk of investment or something like that, but what might you use this, this cash value life insurance policy for?
Okay, so great. So awesome question. Let's say you're not in investing, but you have a cash value policy and you have, let's just say, again, $50,000, and you don't have any knowledge of using it for investing or anything. Well, you can use that money and borrow it from your cash value for anything. Johnny's graduation, a wedding, travel across the world. It's really for anything, because the cash value helps supplement the current retirement plan that you hopefully set up. And the beauty about it, the difference between our plan and program and infinite banking is you don't have to pay the loan back, right? The reason why you don't have to pay the loan back is because of the compound interest. My company's name is Premier 72, and we got 72 out of the rule of 72. Albert Einstein said the eighth wonder of the world was compound interest. And I love the rule of 72. It says you take 72 and you divide that by the interest rate your money's growing at. That tells you how many years it takes your money to double. So the reason why you don't have to pay the loans back from your cash value policy is because of the compound interest, and you never have to touch your principal. You're using the insurance company's bucket. It allows you to um, continue to borrow money, and it's being replenished as you borrow it. Does that make sense, Chad?
Yeah, it does. Maybe dive into that part a little bit more. So, 'cause I mean, I think everyone on here understands the rule of 72. And I think that is a key distinction of how this is different from a whole life insurance policy, or sorry, an infinite banking structured whole life insurance policy. Technically, you don't have to pay back the interest or the loan in any case, because they'll just take it from your death benefit. But
Right.
the argument you're saying is that with the way this is structured, because of the compound interest in the policy, it actually pays itself back. Maybe clarify that part a little bit.
Yeah, I'll give you an example. My business partner, Sandra Noble, she had or has a regular cash value insurance policy, an IUL, uh, and it's powerful. I love IULs, but we call our IUL the Bentley because who wouldn't want to drive a Bentley? But she has a regular IUL. I think she started it, let's say 2000, and she paid into it for maybe 4 years. Stopped paying into the policy. Well, with any type of traditional, typically an insurance policy, you don't make the premium payments, it's going to lapse and you're not going to have the coverage. Well, because of her policy, she doesn't have to make the payments, and due to the compound interest. So she had, let's say, $22,000 cash value in the policy. So what happens is, as that $22,000 continue to compound and grow, instead of her making the payments, if she doesn't make a payment, it will take it from the monthly cash value that has been created with the policy. So she had a real estate transaction come up. And again, when you borrow the money from yourself, there is no application process. You don't have to get pre-approved and all those kind of things. It's your money. So she borrowed $20,000 from her policy, or $25,000 from her cash value. This goes back, let's say 2017. And now she has almost $30,000 in the cash value, and it continues to grow. And she doesn't pay for the policy anymore. She has close to $1 million death benefit that she doesn't have to pay. So it's just so many ways of adding value to your life. And the benefit to the insurance company is, because the way the policy continues to grow and feed itself, she can go get another loan because the policy won't lapse. The policy will continue to pay for itself. So it's just, I'm getting more into the weeds. I don't want to get into the weeds. We can go in one-on-ones to get into the weeds, but just really to understand high level, the wealthy are creating and have created and are using insurance as a tool to fund their retirement.
Yeah. And guys, to bring it all back to a head here, I mean, we're going to have to get into some of these questions here in the end and bring the episode around. But, Asa is another individual who has the creative mind. And I think having people like this on the show right now are incredibly important, because we're heading into some interesting times. And if you're not creative, you're either going to be sitting on the sidelines or you're going to lose money, right? So you're going to have to figure out how to navigate some situations, and having pop-up liquidity, or having the ability to immediately, tap into something that you have in a policy and scoop up a deal when it shows up. Recessions are where, billionaires and millionaires are created. Okay.
Yes.
So we'll leave it at that. Couple of questions, Asa, that I ask everyone on the show. So if you had to pick one thing, what is your superpower in this world, in business or in life? Got to know.
Man, that is a question. I would say my superpower is making people feel good. I love to laugh and joke and have a good time. And I'm more of an empath, and I can kind of feel when people are not flowing freely. So I would say one of my superpowers is connecting with people and just making them feel a little bit better than they were before our interaction.
I love that. And all right, we've heard a lot of really cool things here, and there's got to be something in here that goes with this if you've been playing in recessions. But what is your biggest mistake in your career? And biggest lesson learned, biggest mistake, and what did it teach you?
My biggest mistake, Chad, is not listening to my mentors. And for me, and I'm going to say with me, in my investing business and career, the Midas touch that I had begun to develop had created false belief in my mind where I didn't think I had to learn anything else. And there were several transactions that transpired where I lost a lot of money. And those that were around me that have way more money than I've ever had, have way more advisors, and have clearer vision than I do, they told me to get out of those deals, and I didn't. So I won't make that mistake ever again. So it's just really understanding that if you have a team around you, and when I say a team, that team has knowledge, expertise, and lifestyle that you desire to reach, where you connected to them and they personally have these kind of things and go these kind of things, not Instagram folks. But when you have people in your life that are truly where you want to be, and they're advising you on how to continue to do that, listen to them. So that was my biggest mistake, not listening to those that were around me that had my best interests at heart.
And that is gold right there. And Asa, it takes a village, right? To raise a kid, to raise, to grow money. You can't do it all in a vacuum. And so
that's right.
Surround you are the sum average of the 5 people you hang around with. Might as well be people who know how to make money as well.
Yes, indeed. Yes, indeed. That's right, Chad.
All right. Well, how can our listeners get in touch with you? Should they want to reach out about Premier 72, about being a creative investor, or just to talk to Mr. Asa about all the cool things he's done in life?
Yes, that's awesome. Premier72.com. They can find me there. I do a lot on my own personal Facebook page, Asa E. Patterson on Facebook. Those would be the really 2 ways of reaching out. You can DM me there, or there's a section on the website where you can inquire to get more information.
All right, fantastic. Well, folks, this has been another episode of the Real Estate Runway Podcast. Until next time, over and out. Thanks for coming, Asa.
All right, thanks, Chad. I appreciate it.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team Quattro can help you at thequattroway.com. Until next time, this is the Real Estate Runway Podcast.